Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello everyone, checking back in on USMJ, and the bulls certainly came out to play to end 2016, where we had a clear break of the consolidation that started occurring after the votes and the sell the news reaction. So we had a clear lower high, lower low pattern. Then we formed our first higher low. And when you form your higher low after a pullback, that's when you start paying attention and say, okay, let's see if the bulls can reverse this trend. Let's see if we can start forming higher lows and higher highs. We had our higher low, we made a bounce attempt, still a lower high, and then we traded sideways very, very tight with a clear bull break. And that occurred when 12.5 broke to the upside. The volume spike indicated that break of tight consolidation, and the consolidation was marked by this decreasing volume very clearly. Then that volume picked up on the bull break. We consolidated and formed a higher low, and then an all-out breakout occurred on some big-time volume. Certainly concerning for the bulls that the huge volume occurred on the dump day. That is certainly not something that the bulls want to see, but obviously a decent recovery at this point. So we had the top of this move signaled with the volume climax. You'll see that time and time again. Volume climaxes signaling the top of an uptrend or the bottom of a downtrend. We bounced off the middle Bollinger Band 2 days in a row. This is a bullish hammer. And then it was confirmed and then confirmed to end the week with a strong close at the high of the day. So what I expect to happen from here is what I call reaching an equilibrium, which occurs after a breakout or a breakdown, where you have what we had back here. Higher lows and lower highs. So higher low, lower high, tight range. So we have our pullback low. I expect a lower high to form compared to 215, the high that we did see. It does look like we're going to get a little bit more upside on Monday. And we'll see 20 cents is going to be a tough psychological resistance level. So if we do set a lower high early next week, we'll look for a pullback again. We'll look for a higher low to form compared to 13.5. And then we'll look for that range to continue to tighten on decreasing volume before a clear break, just like it did after the equilibrium was reached after the breakdown. So definitely a very significant move for the bulls. I was certainly trading MJNA on this breakout to the upside. And unfortunately, I'm not as comfortable swinging these USMJ names as I am swinging Canadian names. And that's just because some US names have been shut down in the past. Certainly odds are very, very low for that to occur. But if playing with big positions, certainly something to be aware of. So the bulls, this is the sector leader, MJNA, and big time volume. Look at this dump day, 144 million shares traded. Let's say the average was at 18 cents. That would be, oh boy, rough math on the spot, 18 million, let's call it $25+ million traded. So that is significant dollar volume, and it's the sector leader. So now let's look in and see the weekly, and then we'll see how the other big names followed the sector leader MJNA. So here we have a bearish reversal hanging man at the top of an uptrend. It's a hammer. Bulls did buy the dip, maintaining exponential support. That's one thing that the bulls have shown here in their strength. Holding this exponential support on every pullback, the bulls are buying that dip. And that's a good sign. We've seen the USMJ sector run in January. I think it was 3 out of the last 5 years, and the fact that we had an uptrend going into January certainly increases the odds that we see a nice strong January for this sector. So the bulls should have their hopes high, obviously being prepared for the worst, but as of right now, bulls seeing that nice breakout. You can see this weekly chart, that 200-week resistance, rejection, and then closing above it is when the bulls really kicked it into high gear. Looking at CBIS, also a very similar breakout. We had the clear sell-off, lower highs, lower lows. Then we had our higher low and a higher high, tightening range, and a clear breakout following MJNA. So let's look at the dates. MJNA's first clear breakout of consolidation was on December 14th. And we look at CBIS, and December 14th was right here. So it was a laggard. We had about a 4-day heads up before the breakout started. And it certainly was a very strong breakout here as well. And now we're consolidating. So we're a bit more into the lower high pattern where we have our lower high and consolidation. We did end strong on Friday. This does look like a bull flag to me. And a bull flag pattern is when you have, let's see if I can draw it here real quick. So you've got a flagpole on a breakout. And I'm just drawing that line to show a flagpole. Doesn't really matter. And it's a clear parallel channel between support and resistance on the consolidation following a breakout. So that is where I would put my support and resistance line. No price closing above my resistance line and no price closing below my support line. And that is a parallel channel following the breakout. That looks like a bull flag. And if we were to break those highs that we saw recently, that would obviously be confirmation of the bull flag pattern. So we're looking at resistance, this little double top here, where we got up to 7.2 and 7.27. Weekly time frame, we can see a potential cup and handle here. 707 resistance. So the highest price we saw was 7.7. Now we have a lower high at 7.27. And I don't want to call it a cup and handle pattern. It's really one of the most misdiagnosed patterns that I see. And very often, more often than not, you get about 80% of the way into the pattern and then it doesn't follow through. So what it would be is if the left side here is the left side of the cup, then you have your cup. That's a nice looking cup. And then the right side is lower than the left side because the psychology of what's going on is you reject from that resistance and you see profit taking off of the inability to break the left side of the cup. And then after that handle forms, you get a breakout and a strong move to the upside. So it is a possibility at this point, but again, I would not be making any trades based on that cup and handle pattern. It's something that I'll recognize, but I'm utilizing the daily chart and support and resistance here to indicate my entry and exit positions. So I do like the way the USMJ sector is trading, can't deny that. Personally holding some Canadian MJ at the moment, but I've been back and forth between US and MJ, or US and Canada, and it's certainly nice. I've been trading USMJ for 6 years, and when it goes dead, it certainly goes dead. So be able to go back and forth between the two countries and the two sectors certainly increases trading opportunity in the MJ sector as a whole, and that's certainly a benefit. So the weekly time frame for CBIS, just looked at it. So let's go on to hemp. Hemp has the clear 200-day moving average resistance, rejecting the price. 2 of the last attempts, that's at 3.5. And it's nowhere near as bullish as those other 2 names. It is making a bull break, no doubt about that. But if we look back here, we're struggling at resistance from November 14th. And you look at MJNA, where was November 14th? That was back here at 14 cents, and we already blew through that. We got 50% above that level. So you can see hemp is nowhere near with regard to the breakout that MJNA was. If it were a direct correlation and if hemp were on the same wavelength as MJNA, we would right now, we would be in the 5-cent range. So that's the clear 200-day moving average resistance. Look at the channel on the daily time frame. Reject from the 200-day, bounce off the 100-day. Reject from the 200, bounce off the 100, bounce off the 100, and we're closing right at the 200. That's a really nice looking channel. Close below the 100-day of 3.1 is bearish. Close above the 200-day of 3.5 is bullish. So that's what we're watching early next week. The upper Bollinger Band resistance is there as well. Highest price we've seen on the breakout is 3.68. If we can get above that level, we're looking up to 4 cents psychological resistance. Weekly time frame for hemp. As we know, if you've been watching these videos, I'm very critical of hemp's weekly chart, and that's because they've reverse split and there's a ton of dilution. There's absolutely no denying that. All you have to do is look back at the 5-year chart and see where we're coming from. And we are coming from a huge pullback where anybody that invested or tried to buy into MJNA at any point in 2014 is down a very significant amount of money. And that is just a fact. So the weekly chart, I would not be anywhere near hemp as a long-term trader nor investor. I just don't like the dilution. I don't like the way that their share structure is structured, and I don't like the debt structure either. So if the bulls can get over 5.6, they'll be on their way to potentially changing this weekly downtrend, but that is still a 50% move from where we currently stand. TRTC also seeing some upside, but also still very weak. November 28th, we haven't even broken that high. So again, comparing it to MJNA, the sector leader, November 28th, we were at 12.5 cents. We've already seen more than a 100% move since then, and TRTC hasn't even made it to that level. So all you have to do is compare it to the sector leader to see where we stand, and it's very clear that hemp and TRTC are way, way weaker than MJNA and CBIS. So we did see a move to the upside. Resistance is 3.4, and support currently being established at 3.1. The last 2 days, that's the double bottom low of the past 2 days. The bulls want to hold the middle Bollinger Band on the daily on any pullback. That's going to be approaching 30 cents. And we are seeing a nice higher low, higher high pattern. There's no doubt about that. There are gains to be made here, but they don't compare to the gains to be made in MJNA on that breakout. Looking at the weekly time frame, the bulls are defending this 200-week support. And you can see how many times we bounced off this level. 1, 2, 3, 4, 5, 6 times, not closing below it. We did close below it once back here, but other than that, after that, we've held it 6 times, and now the bulls are showing up, and they need to get above the middle Bollinger Band weekly resistance, and the 50-week resistance is there as well, 33 and 36 cents. That's a must-hold support level. If we lose that, we're looking down at a must-hold double bottom of 221. Now we're looking at NDEV. NDEV is the strongest daily and weekly time frame, just in regards to the fact that it's a fairly new, compared to the other stocks that are 6-7 years old. NDEV is new, so it doesn't have all the history of dilution. It doesn't have a huge downtrend on the weekly chart from a pop in 2014 because of how new it is. Really liking this uptrend, stair-stepping higher. That shows a lot of strength. And here's this equilibrium again, where we have our breakout. We have our low of consolidation at 91 cents. We have a lower high at 136. The high of the breakout was 151. So 136. Now we have a higher low again at 101. $1 psychological support held. And you can see how tight we're getting. A break of $1 is a bear break, and a break of 136 is a bull break. So watch this equilibrium pattern. Higher lows, lower highs, tightening range, usually accompanied by decreasing volume. And you'll see this pattern everywhere. I see it on Apple, Facebook, all the big names. The S&P 500 does this. And it certainly is doing it the same thing here in the MJ sector. And that's because human emotion and human psychology is what we're looking at on these charts. And they occur regardless of the sector. And they have been used since the 1600s in Japan for rice trading. So we're using this 400 plus years later. And it is still giving us nice information for trading. Weekly time frame, there's those stair steps building nice support, higher lows, higher highs. That is a perfect uptrend for the bulls. And again, if you saw the video I did, you saw the clear resistance at 150 that rejected the breakout. And that was from back in February 2013. The highest price we saw was 150, and we hit 151 here and rejected. If we can turn 150 into support, the bulls are looking great. But you can see in all of, I should say the second half of 2016, bulls have been on absolute fire. They could not be asking for a better looking weekly chart. And that being said, we can see periods of consolidation are marked by a loss of the weekly upper Bollinger Band support. Lost it, and then we consolidated for over a month. We lost it and consolidated for a month. We're still holding that level. It's at 101. Update that next week. It's going to be about 106 or so. That's just a rough estimation. So we're going to have to get that level. If we close a bit below it, we know longer-term consolidation is very likely. And last, we've got AMMJ wrapping it up. Did see the same breakout. Look how clear this pattern is, reaching an equilibrium where we have our low, high of this little bounce, higher low, lower high, higher low, lower high, higher low. Can't get any tighter than that. The volume just dropped off. And what indicated the break? A big volume spike to the upside, a big bull break. And we've been consolidating ever since then. That was only a one-day breakout. So we saw MJNA, which had a a week-long breakout, more than a week of just insane strength. And we're not seeing that on AMMJ. Bulls must hold this middle Bollinger Band, and they must form a higher low compared to 721. Certainly looks like they will be able to do so at this point, but we want to be sure that we do not break 721, or this higher low pattern that does favor the bulls over the past 6 weeks will be broken. So bulls still looking good on the daily chart here. Let's check that weekly. Also looking good on the weekly. Look at the severity, that's the wrong word, but the strength of that breakout. And that occurred over months. Multiple hundreds of % gains, and we pulled back. 200-week support held 1-2 times. Moving average, the middle Bollinger Band is catching up. So considering where we're coming from, normal healthy consolidation ongoing here, and the bulls are looking to turn it back up again. They just need to reestablish a new higher low of support, ideally off that middle Bollinger Band, which is at 85 cents and ascending. So that's what we got for the USMJ sector. I was very bearish on the sector after the election. Received all kinds of hate for it, but the chart was showing all kinds of pullback, but that has changed. The bulls have a lot to be excited about in this USMJ sector as we broke the consolidation and the tight pattern to favor the bulls, and the weekly charts are looking good on a lot of these names. If I had to just sum it up real quick, MJNA sector leader, clear dollar volume leader, clear gains leader on the breakout. CBIS is right behind it. Hemp and TRTC are very significantly weaker than those two names. There is no doubt about that. We've got an NDEV and AMMJ, two of the newer kids on the block compared to these names that have been around 6+ years. And I'm liking their weekly charts because they don't have many years, half a decade of dilution and reverse splits and all that some of these other names do have. So that's what we've got heading into week number 2 of 2017. Let's see if we get this New Year rally, which is already underway here. It started before the New Year, but let's see if this continues. We've certainly seen strength in January in the sector before. Thanks for watching. Have a great weekend.